All right, guys, we are back. Now, looking at the looking at the short-term picture, we have had a little pullback here. But this pullback is actually a part of a larger, if we zoom out and look at the 12 hour, this pullback here that we recently had is a part of this larger little bull run that we've been on lately. So although we did have this pullback, as you can see, we made, starting from this, the lowest low here, we started making, so we had higher lows and higher highs, higher lows, higher highs. And even though this pullback was a little dramatic, it still formed a higher low. And now we're going back up. So if we take a look, oh, look, was this, or actually, I don't have any levels above here. So this looks like it was, excuse me, this area here looks like it was where our all-time highs were. And after dropping way down here, we're coming right back up really just within like 300 points of this. So let's go ahead and start charting. It looks here like the overall trend is still bullish. We're looking for the next, excuse me, just on market structure, the next thing we're looking for is a higher high above this level, right? So the bulls, in order to keep this going, need to eventually form a higher high above this level. And then if they pull back again, the low that they make needs to be a higher low above this level in order to keep this trend going up. All right, so let's just do our standard supply and demand here. We see that up above us, we currently have a 6-hour supply and a 12-hour supply sitting there, as well as a couple of levels even higher. Let me extend this. Oh, that barely did anything. Let me just do this right here. Okay, there we go. All right, so looking at the 12-hour, this could potentially be forming a 12-hour demand, but it's not going to be finished until I think 1 p.m. So I'm just going to let this one sit and nothing really below here until we get to this gap. So this, let me change the color. This is not a supply or demand zone. It is actually a gap where, as you can see, this candle, the bottom of this candle and the top of this candle just have open space there. So when I come down to gaps, I play them similar to supply and demand, where I'm looking for a rejection off of the gap the first couple of times, and then I'll be looking for it to fill the gap through, later on. Usually the first couple of times, unless there's something really crazy happening, some news or something like that, it's not just going to plow through. It's going to offer some resistance, but, it doesn't, whether we get down there today or not, who knows? Cross that bridge when we get there. So let's keep going down to the 6-hour. Okay, and it looks like we have a 6-hour demand that formed right here that I'm going to mark. Formed at 58.79. And again, all we're doing is, marking our levels. So this, when price gets back down to this level, we can look to do the exact same thing it did when it was here before, which was bounce up. So if price comes back down here, I'll be looking to take it up. And how do I know when the trade is invalid? Is if the trade goes below either one of, the lowest of these two candle wicks. If the trade continues through the zone down here, I'll know that my trade is invalid. 58.62.50. So let me just mark that. Okay, so I have my first zone here, the 6-hour demand. I already have zones up top, so I'm not going to be looking for anything new. Up top, let's go to the 4-hour. Similar deal. The 4-hour starts a little bit higher than the 6-hour, so I will mark it just so I know that level is there. So if price decides to bounce at this level first, I'll know why. And I'm just going to keep a note that I guess since I'm here, let me just extend it, activate. I guess since I'm right here, I'll go ahead and extend it. Okay, because they actually end at the same place. They have the same stop loss. All right, nothing. Okay, nothing else down here, nothing else up top. And if you look, we have a 4-hour level also inside of the 6-hour supply that's up here. You see it? The 4-hour level would be at 59.23. The 6-hour is at 59.20. So I'm just not marking it to not add extra kind of clutter. All right, I'm gonna go on to the 2-hour. I've stopped using the 3-hour and the 90-minute. So that's why I don't use those, but you can feel free to use those. All right, on the 2-hour, we have a zone within a zone. I always love that because what this could do is give me like a better entry. Because this zone is approximately, let's say it's 58.82 down to 58.62. That's 20 points, right? So I would be able to trade like 1 ES on this or like 5 NES on this if I wanted it to, if I was going to hold it through the entire zone. So this gives us like a better entry because like let's say it waits to bounce until it gets all the way down here. Now my stop loss goes from 20 points down to 8 points. You see what I'm saying? So 58.70. Let's go ahead and mark that. 2-hour bounce zone, nothing here. Okay. And go down to the 1-hour. I don't use the 90-minute anymore either. Okay, we've got a 1-hour level all the way down here at 57.76. Excuse me. So there we go. Let's keep looking. To 94. I'm not going to mark these levels that are in here just because they're so small. Let's see. If I look at the open here, it was about 5,900 down to 58.85. So this move was only 5 points. So I'm not going to mark it because although yes, it was we can see the consolidation and we can see that it dropped out of the consolidation. It still only dropped 5 points. So either way, that's not indicative of a super strong move. So I'm just not going to chart that one. Let me go to the 30-minute. Yeah, this was one on the 30 that got triggered here. Triggered. Okay, let's keep going. Yeah, little teeny 30-minute here that aligns with this 2-hour. I'll just let the 2-hour rest. And then this 30-minute zone here that was triggered right after. So if you're trading 30-minute zones, I really love those. And some of the easiest ones to trade are the ones that the zone forms and then it gets triggered the candle right after that. I love seeing this and I love trading this. Like instead of it being like a couple candles later, if it triggers literally the candle after, oh, I'm typically in there. I'm going to be in that trade. So, okay. But anyway, this is what we got for today. We're currently doing like a little bit of downward consolidation between, kind of like a downward channel between this supply up top at 59.19 and then this cluster of supplies down low that start at 58.82 that go down to 58.70. So this is what I'm going to be looking to trade today. Let's check and see if we have any key levels. I always look on the 5-minute for key levels that we need to pass. In order to like where we would need to pass in order to see the next move. Yeah, 85. not seeing anything super strong that I would want to use. This level here at the top of this wick is something that I would be looking at, but it's a little bit far away from price and kind of right near this supply zone. But as far as the rest of these, they're just giving me like, in terms of what we're looking at, like this like little mini downtrend, right? This lower low, lower high, lower low, lower high, lower low, lower high. So I'm not particularly going to use any of these. This one looks okay with the 3 wicks here. So, but I'm not super sold on any of these being like full rejection points. So this is what I'm going to be looking at today, and I will take a screenshot and share it with you guys now. All right, see y'all later.